Hello, everybody. Today is Monday, June the 22nd, 2026. I am John Blank, the Chief Equity Strategist and Economist at Zacks Investment Research. And today I'm going to talk about something that probably interests all of you, probably the most talked about subject of the last few weeks, the SpaceX IPO. So we're going to do a deep dive. I've had my team take a long look into the financials, the balance sheet, the income statement, the financial ratios of SpaceX, and we're going to talk about what we can learn about the business, or I should say the businesses and their competitors and the outlook. And we will also put this all into a final context of where the stock market is trading, so you can think about it in that terms too. So, one thing I want to point out right up front to all of you, just as a backdrop, in terms of US macroeconomic weight, the current AI infrastructure buildout has actually surpassed the peak of the late 1990s internet boom as a share of the total US economy. Sit down and think that through. It has actually surpassed the late 99 internet boom. So current levels, what I am seeing, and I put it in red for you, is 5.5% to 6% of nominal GDP is this massive, relentless hyperscaler CapEx boom. Artificial intelligence, data center, advanced computing infrastructure, all of that tech and telecom is coming into 5.5 to 6% of nominal US GDP. To put that into context, the I in C plus I plus P plus NX in macroeconomic accounting is coming at 14%. So that is basically 40 to 42% of all the investment that's going into the US economy. That is the story of our growth rate for the last few quarters. How does that compare? Back in the day in 2000, 4 to 4.2% of GDP, about 400 billion in nominal terms at that time, was put into place. And again, it was 13.5 to 14% for the overall investment. So a smaller amount of the overall investment. And just think about 400 billion, then yeah, you do have to put up a fairly substantial movement in prices, but it's not the 1.5 trillion or even more that we've seen in this boom. So this is bigger, it is more consequential. Keep that in mind. Okay, so the SpaceX IPO. We're going to do a deep dive, and we are looking for investing insights. And for a lot of things, you will be surprised. Maybe there really isn't an investment here. I think that might be a fair answer too. Okay, pre-merger capital structures for SpaceX, and I am considering Starlink and XAI, which includes Twitter, as in a post-merger framework after June the 12th on the IPO. A couple of things I obviously want to point out here. Elon Musk, the founder, has 75% control of the SpaceX capital structure. So if you're investing in this, remember the overhang is enormous here by the founder who has 75% of the stock. Now, Starlink, which is part of SpaceX, has a much different structure. Only 42% is Elon Musk, but Fidelity, Google, Alphabet, and Vanguard are in at 30%, and there is a preferred stage of equity for the early stage investors. That's 20%. Stock-based compensation is 5%. The Gulf sovereign states, you probably heard about them, they're in at 3%. Now over here is the XAI capital structure, pre-merger. So I want to point out two things. They raised in May and December 24, two tranches of $6 billion. That was the bulk of what's going on here. The remainder of this is the Series D and E, but I focus on the B and C because they were back in the day. And now look, you can see post-money valuation, they took a 4-time or even an 8-time rise because of the way they priced this deal. So it's astonishing to see this, to see these inflated numbers and to see this control the founder has. There it is. I will let you return to these slides by getting these slides from us and review them at length at your leisure. Okay, several important financial statements. These are the putative business fundamentals supporting the stock. Eventually or never. There are lots of loss-making businesses. I circled the cash flow statement here. For the last 3 years, we're seeing this, and of course, 5 billion loss, 10 billion loss, and 20 billion in investing cash flow loss. Net cash change is also negative right now. The diluted earnings per share is negative right now. Retained earnings is negative right now. You can go through the growth analysis down here at your leisure, but I like the real numbers. And as you can see, the business has been growing from 10 billion a year in 2023 to 18.7 billion now. It has definitely grown revenues, but it has not turned to profits. Kind of done the opposite here. You can see the operating income went from $500 million to $2 billion in losses. So it turned into a loss-making machine, and for some reason, a good reason, he put it up for valuation to bring in the cash to this business to cover up those losses and all the profits that might have created with it. So here we are, the profitability ratios of SpaceX. Again, we can look through the gross margins and the operating margins, talk about the negative profit margins. All that's sort of obvious, but I wanted to go down here to the leverage ratio. Debt to earnings for this company is 16.22. So the debt is 16 times the earnings before interest and taxes and depreciation. 16 times. So I asked a very simple question. Is a debt to earnings ratio of 16.22 excessive or worrisome? And here is what came back from this analysis. In traditional corporate finance, a debt to earnings ratio of 16.2 would be considered deeply into speculative or distressed territory. However, that's a backward-looking lens, and the June IPO has changed everything. Credit markets and the rating agencies have now, I put it all the way down here, reassigned a BBB plus rating and a stable outlook for SpaceX. Moody's is at Baa1, and both agencies are explicitly looking back on the trailing metrics that I have shown you. Why? Because SpaceX raised $85.7 billion in equity proceeds. They had $29 billion in public debt, largely driven by absorbing $20 billion to use to roll over XAI and X liabilities. So they took $20 billion of liabilities from XAI and to X, aka Twitter, into the capital structure, and then covered that with an $86 billion equity proceeding. So effectively, that leaves $50 billion on SpaceX's balance sheet at this point in time without anybody else cashing out. And of course, they will cash out. So keep this in mind. This was SpaceX with these XAI businesses. They absorbed a $20 billion loan to pay for these businesses. If you remember, Twitter was bought for much more than that back in the day. So I'll let you think about what that means. Okay, presentation of operating and financial metrics. I want to point out one thing here. This is the business everybody likes to talk about because it's profitable. Starlink subscribers, they indeed have gone from 2 million to 9 million in 2 years. The average revenue per unit on a monthly basis, monthly earnings per unit of customer, has actually gone down from $100 a month to $80 a month. Now, if you go onto the Starlink website, you can get 100 Mbps of service for $55. So $155, you get 400 Mbps, which is less than I'm talking to you now. I have 500 Mbps here in California on fiber, which is no latency. So the issue with these satellites is how high they are. The higher they are, the more the latency problems result for trying to get higher bandwidth stuff. So there is an issue with trying to get high bandwidth Wi-Fi from a satellite. Now you notice they're making $100 a month now from that $155 a month for 400 BPS. which is a decent margin. You can think about, what you're making, $56 per customer. That says 99 per customer. So you can say, okay, basically, if it's, we don't know how much the profit they're making, but it's not this is just revenues per month. This is not profits per month. So they cut $20 of revenue per month to build this business up from 2 to 9 million. They cut $20 per month to go from 2 to 9 million. So the growth was done by discounting prices for final subscribers. And I think we want to point out here the Starlink launches in average per year were 98, 140, and 170. So they were doing, you can see for yourself, the 52 weeks a year, doing 2 to 3 launches a week, putting these Starlink satellites up, and there's like 10,000 of them now. And it does generate this revenue, and it has been growing by cutting prices. So that's the idea of what this business is. So I asked the question, is a SpaceX average revenue per unit of $81 in 2025 a good number? How do I think about this? So the drop from 90 to 80 is not a sign of eroding price power in core markets meaning developed markets. It's a deliberate global strategy. They're expanding in price-sensitive markets. The subscription for Starlink outside the US, remember I told you it was 55 to 150 for US subscribers. It's 10 to 40 a month outside because of the purchasing power is so much less. So what they're doing is they're building the business, at first in the United States at 55 to 150, and then they're charging much, much less on the marginal cost because it's $25 a month is pure profit with this capacity that's excess. So that they're thinking about is the emerging markets are excess capacity. So just think about this, 5 million of this is us, in defense things and around the United States and in rural areas. But the other half is at a much lower price point. Now, this is before competitors like Amazon's Project Kuiper, Q-U-I-P-R. We're going to talk about Amazon's Project Kuiper. There's a sense out there that there is no competition for SpaceX now. That is true, but it is certainly the case. And I will point out two of these groups, one of which was Amazon, that company, the Mag 7, that has its own plan and it's already underway to get this up and running. So let's talk about this. What is Amazon's Project Kuiper? Now, they rebranded this Amazon Leo in 2025. It's a $10 billion infrastructure initiative to low Earth orbit, LEO, low Earth orbit. Now, remember what I told you about the speeds of the Wi-Fi on Starlink are only up to 400 Mbps. This low Earth orbit allows a lower level of latency, and that can compete with Starlink at a higher level of performance for Wi-Fi. So their plan is 3,200 satellites and 3 shells between 600 kilometers basically above the Earth. So basically fairly low Earth orbit, 3,236 satellites, and they're interwoven with optical inter-satellite links, a floating mesh network. So basically you're going to be able to constantly connect to ground stations by talking to each other. This is going to get the latency way down to 50 to 30 to 50 milliseconds. And that, here it is, and I put it in underline, 1 GPS. Now, this is the real big, strong performance for Wi-Fi for businesses. So that is, again, I told you Starlink's best is at 400 Mbps. This is basically another 600 on top of that to 1 Gbps. So they are going to look to offer these services, low Earth orbit nano, low Earth orbit pro, and ultra. And these are different groups for different groups. Maritime, of course. Commercial and aviation will be at that 1 GPS. And of course, nano will be the one, your cell phone at 100 Mbps. So they currently have 360 satellites in orbit, and they have a launch bottleneck. They're going to still struggle to get this out, but they have gotten this going, and they're going to keep pushing it. So it's going to be focused on the Amazon Web Services clients, enterprise clients, defense agency, cloud customers. Yes, I would much prefer 1 Gbps than 400 Mbps in a commercial sense or in a defense sense. So this will definitely compete with those high margin businesses. Enterprise beta, full enterprise beta, and you can check this yourself, April 2026. So of course, the SpaceX IPO came along in June, 2 months after the full enterprise beta of Amazon's Project Kuiper. So, who are the partners of this? They're big ones, folks. AT&T, Verizon, Vodafone, NASA. Yes, you saw that. And United Airlines and Delta. Yes, please recognize that. So, this is supposed to scale across 2027, and initial service threshold will reach 578 satellites next year. So, genuine competitor with stronger service on the way and not in the future, so far out that you can't understand it within the next 18 months. So, pure company analysis. Again, we can break this business down into space, into connectivity, or into AI. Of course, OpenAI and Anthropic are here. I want to point out one thing: Google, Anthropic, and OpenAI and Perplexity in 2025 did, again, just in terms of revenue, not profits, $25 billion a year. So we built this epic $1.5 trillion in capex for 25 billion with a B revenue from those three groups, all of which are, astronomically priced now. So keep this in mind. We are way ahead of the curve in terms of the revenue that has been generated to date from this thing. And of course, it's growing. Yeah, if you grow from nothing like OpenAI to 13 billion, you're going to get an astronomical growth rate. Here they are, but you can see they're already declining fairly rapidly and will continue to decline as they go forward. So I looked across this and I pulled up a ticker. Of course, this is Northrop Grumman, Lockheed Martin, Boeing, Viasat, Iridium, these types of groups. But here's something that I found of great interest. Rocket Lab, RKLB. This is also growing quite dramatically from nothing in 2021 to 600 million in 2025. And this is interesting. So let's take a look at Rocket Lab. Rocket Lab is now marketed at a market cap of 62 billion. It's an aerospace manufacturer and launch service provider. It's Electron orbital rocket launches small satellites. It's completed 75 missions as of January 2026, and it is the most prolific small lift launch vehicle in operation globally. So it's another competitor. And of course, Rocket Lab is about to introduce this thing, what they call the ultimate growth engine, which is Neutron, a medium lift rocket designed to compete directly with SpaceX Falcon 9. So the next 6 to 12 months are entirely about Neutron execution. And if it hits this window in the late 26 launch window, they will be the second pillar of the modern space age. So payload capacity of Neutron is 28,700 pounds in, of course, let's talk about it, low Earth orbit with a reusable booster. Getting back to Amazon's Kuiper, of course, this is a lot of capacity, competing directly with Falcon 9. And of course, they will offer this to anyone, including, of course, Amazon. So the Hungry Hippo design, you can read about it. All this stuff has Archimedes engines, and they're on track for an aggressive, highly anticipated maiden voyage in the fourth quarter of this year. They have signed several major launch commercial agreements, and they are announced the first one. Yeah, I'll go ahead. Don't be surprised by this. In May of 2026. So April and May for Rocket Lab and Amazon's Kuiper were certainly the impetus for getting the Starlink and SpaceX segment out in front of this change. You as an investor should know about both. Okay, space industry analysis. Now, I'm just going to point out the obvious thing. You need federal government support for defense spending on space access, assets, lunar and deep space programs. Those are government funded. Long development cycles. These things take 5 to 15 years, so there's a lot of government dependence as customers. And of course, spectrum allocation and launch licensing are all part of the story. So, are we surprised Mr. Musk has gotten into the federal government business? No, we should not be. It's heavily dependent for his business, this one particularly, more so than Tesla. So keep that in mind. Okay, connectivity industry analysis. These are the layers that are most important to analyze. So we're going into this bubble, I'll call it that, and it's got all these layers of equipment, from infrastructure to semiconductors to network operators, satellite or cloud connectivity, and down here, of course, the applications that are getting beaten up in the share markets right now because these businesses can now compete at the cloud and edge. And we'll talk a little bit more about Cursor and how that is concerning for the application and services business like Netflix or Zoom, like we're on right now. So again, down here, the old-fashioned name of Cisco is still around, Nokia and Ericsson from the 2000 period. Qualcomm is still around, and of course, Broadcom's a roll-up of a lot of different chip companies. Network operators, AT&T and Verizon, still around. Viasat and Iridium, Globalstar, still around. This is the level that came through COVID. Cloud and edge networks, Amazon Web Services, and Microsoft Azure really came out of the COVID pandemic. So this is something I pointed out to our investment committee. You may feel like this all started with ChatGPT in 2022, but it actually goes back, if you look at the data, to the birth of the massive cloud and edge networks during the COVID pandemic. Amazon Web Services and Microsoft Azure, to no surprise, have gotten involved with Copilot and, of course, this Kuiper network and all these other groups. They are going to be the competitors for SpaceX in these businesses. So down here, there's literally all kinds of information about these different things here. Of course, different language. I picked up ARPU here, so you can learn all of these different things here on this slide. I just focused on these names so we can understand a little bit better how this industry works. Again, point is to get these slides from me at some point in time and use them yourself. Formal AI analysis. Where does XAI fit into this crowded incumbent framework? Remember, all these groups are in these businesses for XAI. I'm not talking about SpaceX anymore. I'm talking about XAI, the $20 billion that was rolled in to this business that he covered at a loss and got the credit rating up to a triple B. So now you're in with NVIDIA, AMD, and Broadcom. We talked about Amazon Web Service, Microsoft Azure, and Google Cloud, those big cloud providers. Now we've got OpenAI, Anthropic, and yes, there they are. And then down here, we've got C3 AI and Palantir, Salesforce, and Adobe. Yes, they can become competitors if they choose to. So again, this is another one of these industry analysis. And again, you can go through all the different levels of this AI business here. And of course, we don't have time for all of it, so go ahead and get the slides from me. All right, economic and market classifications. Space segment, oligopoly. Space segment 2, natural monopoly. Connectivity, monopolistic competition, and AI infrastructure and computing, oligopoly. So again, why does these groups care so much about our government right now? Because they function as oligopolies or monopolies. And this is going to create pricing power, which we've seen, and government certifications, which can give barriers to entry because it's going to be a big problem for people who are not in these businesses. So keep this in mind. Again, these are not very competitive businesses unless they are very, very, very big and they effectively become monopolies or oligopolies. So we're going to get through to the management discussion of SpaceX. Of course, we can talk about the capital they rolled in for their businesses, including Mars exploration, getting their payments out to their employees or to Elon Musk. But down here is an interesting thing. They are going to acquire companies with this currency. Software businesses, satellite tech businesses, defense contractors, even, and AI companies. This is the rationale that's been increasingly important because they want to get beyond law and services. They want to get this money they brought in and buy companies. So who did they buy already? Cursor. Why did SpaceX buy Cursor? You probably heard this word. You probably didn't link it to this business, but I will. It is vibe coding. At its core, Cursor is an AI-powered code editor built as a fork of Microsoft's Visual Studio Code. It integrates large language models to assist software developers in writing, editing, refactoring, and debugging code in real time. Its standout feature, which is called Composer, or at least one of them, allow these software engineers to build entire multi-file applications with conventional props on LLMs. So vibe coding, you probably heard the word. These engineers focus on high-level system design while AI handles the bulk of the raw code generation. That is vibe coding. That is Cursor. So SpaceX acquired Cursor in a $60 billion all-stock transaction. So how much does this business generate revenue right now? $1 billion. $1 billion for a $60 billion. $60 billion for $1 billion in revenues. 60 sales to price to sales, very richly priced. But this is going to create a core business for the XAI segment that it did not have, and that is the strategy. So Cursor acquisition is already embedded daily workflow over 1 million developers across 50,000 companies, including NVIDIA, Uber, and Adobe. It has exclusive proprietary pipelines of engineering data to train Grok, including so they compete against Anthropic Cloud and OpenAI's Codex. And Cursor has millions of intensive daily code generating requests to give XAI an immediate continuous workload to process because XAI is frankly not very competitive until it bought Cursor. So remember, acquiring an AI startup that has reportedly surpassed $1 billion provides another justification for these sky-high tech valuations. Again, one sky-high valuation for another sky-high valuation. You might have heard about vibe coding, but you might want to place it into your mind. Yeah, it has 50,000 companies, but they're doing $1 billion in revenue this way. It's highly subsidized. It strikes me at this point in time. We will see where it goes, but this is the real worry for those software companies that Cursor gets a whole lot bigger, and this is now part of SpaceX. So the broader stock market narrative, I just want to point this out to all of you. Price to sales, more than half the S&P's total value is now priced above 10x sales. That was outlandish not too long ago, but now it is normal. So yes, it is extremely overpriced in this market. As an investor, keep that in mind. The backdrop, this is now a tech weighting that is 5% above the 99 bubble. It is worse, and I'm circling all the way back to the top of my slide. Remember, I'm taking you to slide 24 on this tech sector weighting, but do not forget that I showed you the macroeconomics that it is in fact bigger. So it is a bigger bubble in terms of speculative fundamentals, in terms of the stock market, in terms of the macro economy. It is bigger. It is bigger. Just keep that in mind. All right, Micron, there you have it, folks. $100 a share just a year ago, over $1,000 a share now, 10x boom. It does have the support from the earnings here, of course, but you have to ask yourself how long this can go when there really is only 20 billion in revenue coming into these businesses at this point in time, and now this is $1 trillion company. 20 billion in revenue, $1 trillion company. Go ahead and think about it. All right, so we've seen some selling off after this whole thing, and it may well be this is the top. We'll show you that, the 50 days at 71.55 and the 200 days at 6,958. So we've got a long ways to go from 7,300 to 6,800. That's a good solid drop, and we are a long ways from the 200 day. Although we've been there for quite some time and it is going up. So perhaps we carry on well, but a breach below 1350 is the area you should be concerned about as an investor when you think about all this SpaceX stuff. Thank you for attending. I hope you enjoyed it. It certainly was more interesting than I planned and more longer than I thought, but that's because of such the engrossing and interesting stuff that I covered, so I wanted to share it with all of you. And of course, you can get these directly from me, and I've talked about this throughout this presentation. Getting the slides, 866-794-6065. Call us, please, or send us an email at strategycall@zackspro.com. If neither of those work for you, go on to the web at www.zackspro.com. We also have a LinkedIn page and a Twitter page, but these are the real places to get this information. And that wraps up this incredibly long, but really, really cool and very, very valuable SpaceX deep dive. I hope you enjoyed it. I certainly enjoyed putting it together. Thank you.